Time now for the markets with Leighton, and you say cattle futures continue to trade higher still.
Higher still. Supplies are tight. We'll have more on that in a moment. And the beef sector does indeed continue to be in the spotlight as we head into the last week of the month. Also ahead in our market segment, the recent expansion of chicken supplies will likely slow down. Soybean prices may dip by the fall of 2014, while China is expected to import less cotton this year. We begin with Mississippi's #1 ag commodity, chicken. A leading investment bank says the recent expansion in U.S. chicken supply is poised to slow, which will bolster prices as well as cutout margins. BMO Capital Markets analyst Kenneth Zaslow thinks broiler production may continue to increase for the foreseeable future, but he says supply expansion will likely slow from what it was in the fourth quarter of 2013. He predicts that a smaller breeding flock will slow production growth to 2 to 3% in the first half of this year. As we record this program Thursday morning, cattle futures were up another 55 cents in the front month. Wednesday's cold storage report confirmed that beef supplies continue to be tight, and Friday afternoon's on-feed numbers are expected to show over 6% fewer cattle in the nation's feedlots than that were there a year ago. Analyst Alan Brugler says there's just not enough fat cattle to go around right now, and meat packers are very short bought.
It's kind of a perfect world, if you will, if you're bullish, and that is production's down. USDA was suggesting that the first quarter, January, February, March, would be the smallest beef production since 2005. Cattle on feed report confirms that we're down about 5.5% on cattle. And while we had been picking tonnage up by feeding them to heavier weights, the packers are now so anxious to get these reduced number of cattle that they're buying them what we call green, just barely ready to market, and that tonnage is starting to come down. The average carcass weight is starting to come down. So bottom line is there's just not enough beef to go around. The wholesale prices shot up to all-time record highs for choice and select, and we're also seeing pickup in retail prices now.
Our trivia quiz this week concerns horses, and here's the question. What city in the United States promotes itself as Horsetown, USA? Is the answer Lexington, Kentucky, Fort Worth, Texas, Norco, California, or Carson City, Nevada? I'll tell you at the end of the markets. Since our last program, the March soybean contract broke through the $13 barrier and then slipped back some. While making planning decisions, analyst Tom Fitzenmeyer is cautioning farmers to see the downside risk that could be ahead for soybeans by the next harvest due to bigger global supplies.
If we have the acreage increase that everybody is anticipating, we have this big South American crop. You know, they're estimating the Brazilian crop at 90, and some even think it could be 95 million metric ton. That's a lot of competition, and eventually that's going to weigh on, especially on that new crop month. You could see that trade as low as 950 by the time the fall rolls around. So for those that want to make that switch from corn to beans, there's some downside price risks that you better take into consideration.
The week began with cotton futures surging to their highest price since August 20th, but agfacts.com now quotes analysts saying that this market looks overbought. Extension ag economist John Michael Riley stopped by our studio to offer his analysis of cotton late Thursday morning. John Michael, cotton had a strong start to the week. Where are we now in the futures market?
Well, if you look at the December contract, just under 80 cents. The nearby contract is really the one that's been on fire of late, just under 88 cents a pound. So we have seen some upward momentum in cotton prices over the past, few days, maybe even as far back as a week ago. So that's the good news in terms of overall price points.
Are we indeed sitting on a tight supply? Is that the reason this market is on fire?
Well, it's not so much just a tight supply, although, given the decrease in acres last year with lower prices at about a year ago, we are in a tight supply situation compared to the previous year. But another thing that Dr. Cleveland mentioned this past week is the quality issue. High quality cotton is the thing that's really in tight supply. So that's probably a lot of the reason that we are seeing these higher prices. The demand for higher quality cotton appears to be pretty strong. You think about cotton that we're going to use here in the United States, an economy that is improving and demand is is probably at its greatest. We want the higher quality cotton, and so that's what the mills are in search for.
Well, it's no secret China has a lot of stockpiles of cotton, but I've also understood that some of that, due to its age or whatever, that again, what you're talking about, the quality of that cotton may not be attractive to a lot of folks.
They have been building their inventories. Roughly 60% of the total cotton inventories in the world sit in China, and you're right, a lot of that has been sitting there for a while. Deterioration potentially taking place, but they are the ones that are holding on to the bulk of the total cotton stocks.
Now, some of the industry want to say we're going to have an increase maybe in cotton acreage, you know, in the Delta and elsewhere this year. Is that likely? How is that going to play in the market?
It's very potential. The estimates from earlier this month came in on average at 11 million acres, which would put us somewhere between where we were at last year, right around 10.5 million acres, and then the previous year, just under 13 million. So that's the analyst expectations. I think if we continue to see prices trend higher, as corn and soybeans have been suppressed over the past few months, we could potentially see cotton buying some of those acres back.
Before our new feature story, let's check the trivia answer for this week. The correct choice is C. Norco, California has few sidewalks but lots of horse trails.